Big story tonight. It revolves around IT major TCS. The company has kicked off Q3 earnings season, and what has turned out to be a pleasant surprise, it has shown a 5.3% sequential rise in consolidated revenues. The consolidated revenue, the number is 58,229 crores for the third quarter. In fact, if you look at the third quarter revenues for TCS, now the number has crossed the $7 billion mark. And the net profit too has risen. It has risen 4%. If you look at it on a quarter-on-quarter basis, it's come in at 10,846 crores. It's pretty much in line with estimates, maybe a tad lower, but margins, which were expected to improve, the margins haven't seen much growth in TCS numbers this time. And the company, of course, has reported they've bagged deals worth $7.5 billion this quarter. In fact, attrition too has dropped for TCS after 6 quarters of an uptick. So what does this really mean for the IT sector as a whole now that TCS has come out with those numbers? Could things be different this quarter? We'll get you those details. After speaking to our experts, you'll be able to glean some for yourself as well, what the realities are about the Indian IT sector. But before we get down to that discussion, here's what we got from the TCS management as they reported the numbers.
We have basically been invested in hiring fresh talent and training them for good 6 to 9 months before making them productive, and that investment is now paying off. So it is not, I will not call it a blip. It is actually a planned way of doing it, and we'll continue to optimize it going forward as well.
We are getting deals. The new price points does get factored in. Cost and optimization deals would be competitively built versus sole source deals and the digital transformation deals. We have an advantage.
Vendor consolidation and cost and optimization, that kind of opportunities are there, definitely. And it's a mix of both cost and optimization as well as growth and innovation-led deals. And it's the mix of, the percentage of how much of it is in cost and optimization, how much of it is in I think it's along the expected lines and where we want to be, right? We want it to be, and I think it's looking good. There are no concerns per se.
Well, that's a word that we got in from the management of TCS earlier today. Let's also connect with my colleague here from our research team. Anisha is joining us to walk us through the big takeaways from the third quarter earnings of TCS and what they've said by way of an outlook for the coming quarter. Anisha, how is it looking for TCS this time? What were the highlights of the numbers they put out?
Well, TCS reported a mixed quarter this time around. While the revenue growth was much better than expectation as the constant currency growth came in at 2.2%, it was the margin which was a tad bit lower than expectation at around 24.5%. The street was working with an assumption of around 24.7%. Consequently, the bottom line is looking a tad bit lower than our expectation at 10,800 crores versus our expected 11,200 crores. In terms of the other internals, attrition has cooled off on a quarter-on-quarter basis. It is at 21.3% versus 21.5%, but on a net basis there actually has been a headcount decline. So the headcount has actually declined on a net basis by around 2,000, telling you that with respect to the growth indicator as a headcount, there has been a tad bit of a slowdown, plus the commentary regarding hiring going forward is a tad bit muted. Even if you look at the deal win pipeline, it's within the range of the $7 to $9 billion per quarter that they have been doing, but it's coming at an almost 7 to 8 quarter low because the average over the past many quarters has been around $8.4 billion. So there is a bit of decline there as well. Europe has declined in the sense the rate of growth has actually come off a tad bit, and similarly for BFSI as well, the rate of growth has slowed down a tad bit, and that's what is showing in the numbers. So a bit of a mixed number coming in with respect to top line growth. That's solid. Margin is a bit of a miss, and consequently the profit figure is largely in line.
All right, fair enough. Thanks very much for that. Let's find out from our experts what they make of these numbers. Right now, we have Ajay Bagga joining us, chairman of Elements Platforms and a market expert who we love to connect with. And also perhaps in a moment, we'll have Mitul Shah, the head of research at Reliance Securities with us as well. But Ajay, do tell us from the various factors that are at play and perhaps some evidence from the TCS numbers and the commentary from the management. Do you see any positive turnaround for India's IT sector after getting beaten down so much?
Vikram, because it's been such an underperforming segment, we saw some rise in the stocks today. in anticipation of the earnings. But the problems still remain. Attrition remains a problem, and there is a question mark on how fast the growth will be, or have we come to a new normal of this kind of a growth. So that's what's afflicting the sector. I think another 2 quarters we'll let it pass and then look at entry. Right now, it would be wiser to pass the sector. It's very clear from the last year's underperformance that the global headwinds were impacting the Indian IT companies as well, and the attrition rates. Any company today, we are seeing 21% attrition rates, and others have shown 30% even. So that kind of exodus of talent out of any company would be watched with a lot of trepidation by analysts. So that problem still stays, that cannot be wished away. Uh, Overall, revenues are growing. These are very well run companies, great managements, they generate a lot of cash, but they are not priced for the kind of slower growth that has become the normal. That's the big issue.
About slower growth, but in the same breath, we're talking about the reopening of the Chinese economy. We're talking about the American macros not turning out to be as bad if you go by the jobs data that has come out recently, and perhaps we'll see those interest rates peak sometime soon, and perhaps cutting off those interest rates soon as well. All of these factors, don't they bode well as far as the rupee depreciation is concerned? All of that should actually help the IT sector, wouldn't you think?
That's a small part of it. In fact, they get a benefit from a rupee depreciation, but we are expecting a weaker dollar this year, especially in the second half as the Fed rates peak. But what has come out from the US jobs report, even though the numbers were higher than estimate at 223,000 versus estimate of 220 of 200,000. The good news was that they were on a declining curve from November. Second, the wage growth rate has come down. The third was the number of hours worked, especially in the private sector, have reduced. So that overall is leading to lesser wage and hopefully lesser demand. That was what the market was celebrating on Friday, and we are seeing a continued celebration today as well in the US markets. The second big thing was the manufacturing PMI already was in contraction range. And then we saw the ISM for services. That also coming down in contraction, a slowdown in services. That was welcomed as a sign that the Fed's rate hike and the tight monetary policy is working. And that could give some space to the Fed to reduce its rate hike limits and hopefully to ultimately pause by mid of this year. So markets right now, Vikram, are showing about a 75% probability of a 25 basis point rate hike on the 1st of February at the next Fed meeting, and another rate hike, another about 66% in March, if at all, and then kind of the rates peter out. And it's actually showing end of the year Fed rates at 4.7, while the December dot plot by the Fed has been at 5.1 to 5.25. So the markets are pricing in a rate cut, which the Fed is in denial. Tomorrow, Jay Powell speaks at the Swedish Riksbank conference. We could see some more hawkishness there because
Okay.
these
So you're
rising
saying that we are not quite out of the woods, Ajay. And of course, like you said, we'll have to wait for a couple of quarters to see if the IT sector does make it past the various risks that do stand, especially when it comes to geographies like the US, for which the Indian IT sector has a huge exposure. Mitul, what are the factors that you think are going to guide the IT sector's turnaround story? Do you think it's happening anytime soon? Because Ajay Bagga has clearly made it obvious that he doesn't believe it's out of the woods just yet.
See, overall global situation is slightly uncertain right now, but the way it was expected, that adversity has not come. So situation is relatively better than expectation. But what is happening because of this high level of uncertainty in various geographies, these global tech companies are not in a spree of new orderings and increasing or ramp up in the deals. This is what TCS management also indicated, that because of uncertainty, there is a slowdown in decision making, particularly in the US geographies. And as we all know that US is contributor of 50 to 60% of the IT business of all these Indian IT companies. So that is impacting business sentiment right now for investors in the IT space. And moreover, probably one or more quarter of similar nature we would expect. Post that, as indicated earlier, once the Fed rate is stabilized and Indian inflation and all those parameters stabilizes, people would start again relooking at IT space.
Then what's the demand outlook? Taking away from TCS's third quarter, Mitul, the numbers that you saw and the commentary that you heard, what is the outlook on demand according to you, the nature of deals and the kind of pricing that the Indian IT sector is going ahead with?
From the commentary, it was very clear that right now the situation is not great because industry has witnessed very high growth in last 2 years. So everyone is chasing for new deals, and that is also impacting the pricing power of these companies. And TCS management also highlighted that everyone is hungry for the deals. So competitive situation is definitely there the way it was not there in earlier 2 years, but now situation is slightly changing in terms of pricing power as well as competitive intensity. Even in terms of geography wise, US is right now not into the decision making. Europe company indicated there is a sizable slowdown happening. Only UK geography is now a bit aggressive in terms of the new deals and transformation, cloud migration. But UK overall contribution is hardly 15 to 20% for most of these companies. So major pie, that is nearly 70 to 80% of the geography as well as business verticals right now not giving any great outlook, and that is why we also remain cautious on IT space for next 1 to 2 quarters in terms of outlook.
Our experts tonight, both Mitul and Ajay, agree that right now is not the time for exposure to the IT universe. But when that turnaround actually happens, Ajay, which are the verticals that you think are going to lead the growth? And in that, if you can tell us, which are the companies that you think are going to lead the charge to positive growth?
For IT or for overall
For
market?
IT growth right now, because we are concentrated on the TCS numbers and how much it gives us an idea of what is to come as far as the Indian IT sector's growth story or coming back to growth story is concerned.
See, again, there is worry that even on the cloud business, which was a very strong growth segment, there is overcrowding, there is hyper competitiveness, and even the majors like Amazon and Microsoft are facing headwinds. So there is oversupply there as well. So pricing will be an issue. I would say 2 quarters, you can just forget about it, let it work out. Overall, I would pump for the large cap companies vis-a-vis the small cap or mid cap because of valuations. I think the larger caps have come to reasonable valuations, still not very attractive because we don't know what will be the degrowth impact over the next 2 quarters in terms of demand cooling off, in terms of new orders not flowing through as fast, and the impact of the attrition that has continued for nearly 6 quarters now. So that remains to be seen. Again, the results today are not in line with the multinational results that we had seen about 3 weeks back. So we'll sit in the night and analyze it versus that. We'll get a better picture, and then later in the week, as the second biggest company comes in, that will give a good idea, Vikram. But I would say large cap IT will probably outperform mid cap just because of the valuations in the mid cap had really run up too fast. And of course, they grow faster. But in this kind of a demand environment, which is getting challenged, I think the large caps might have more stability.
Mitul, valuations definitely, like Ajay is pointing out, is going to be one driving factor in terms of the growth story and how it emerges and how quickly it emerges. But even beyond valuations, when you look at the company's adaptability to the requirements of of various companies and various verticals within companies, how well poised do you think some of these IT companies are compared to the others? And do you think they come from the large cap universe or the mid cap space?
Yeah, Vikram, you highlighted very rightly that, and Ajay also pointed out that we believe that large cap are better placed in terms of vertical as well as geography. Whenever such slowdown, global slowdown occurs, then people always look at valuation rather than growth. And in valuation comfort, we are comfortable with companies like Infosys or even HCLT compared to many mid-cap companies where growth has been high till now, but probably people, a street is not yet factoring the kind of a slowdown or what recently we have seen in terms of a massive layoff at Amazon or many other such tech companies. So those things will flow through the business going forward, and which will certainly have some impact on the business of IT service companies also. So that is yet to play out in next 1 or 2 quarters. Till that time, large cap could be considered as a safer haven compared to the mid cap companies within IT space. And as pointed out earlier, valuation is still, though after corrected a bit sizably, but it is not very attractive compared to historical averages where one can initiate a fresh buy. One should wait for some more correction, and definitely at that juncture it becomes risk reward favorable.
So the IT sector is not looking the most promising. That's what both our experts agree upon. It's going to take a couple of quarters for more clarity to emerge, whether we are going to come out of the woods and how quickly we are going to be able to do that. But they do agree that large caps are going to be the way that the IT sector is going to lead the charge, as it were, from the position that they find themselves in. Big tech has taken a huge beating in recent times. The Indian IT sector is going to face the brunt, is what Mitul says, can't be an outlier entirely. And that's the story that we are tracking along with the TCS third quarter numbers and the commentary we've got from the management. Ajay and Mitul, thank you very much for joining us with your perspective on India Tonight.